Let me welcome you to the EGROW Webinar series, which is attempting to provide under Task Force 5 G20 issues that are contemporary in nature and that have an impact on international economic order. Today, in continuation of this webinar series, EGROW and Task Force 5 under G20, we are going to be discussing financial inclusion. As you know, in our country, we have made great progress in financial inclusion in the last 1 decade, especially after the Prime Minister introduced the Jan Dhan accounts. The journey that the country has taken on financial inclusion has been on mission mode. The Jan Dhan accounts, then connected with Aadhaar and mobile network, the JAM Trinity, has produced astounding results. We have about 46 crore Jan Dhan accounts today, which are mind-boggling. The connectivity that it has provided to that segment of the society which was not enjoying the fruits of financial inclusion or banking development since 1947. To discuss this issue, we have had the very best minds in our country today. We have invited Mr. Anil Kumar, who's former executive director at the RBI, and before becoming the executive director, he has headed the enforcement department of Reserve Bank of India as chief general manager. He has held different departments in the Reserve Bank at different levels in the area of management of currency and banking, rural credit, supervision. He was also a member of the faculty in the RBI College of Agriculture Banking, Pune. As he will be talking to us about the initiatives that the Reserve Bank has been taking, we will invite him to be the first speaker for the day. We'll then have Mr. Chintala. He was the chairman of NABARD Financial Services. He has worked extensively both in NABARD and, of course, for a short time in NABARD Financial Services. He did his studies from the world-renowned Indian Agriculture Research Institute, New Delhi. He has also been the chairman of NABARD Consultancy Services, NABCONS, and NAB Foundation. He was on the board of prestigious institutions like Institute of Rural Management, DICGC, and the advisory board of IIM Ahmedabad. He has worked extensively in NABARD, and he was also the director of Bankers Institute of Rural Development, BIRD, Lucknow. He had, in his past career in NABARD, worked in various capacities, and to his credit and involvement with the world's largest microfinance program, the Self-Help Group, since its beginning. And I think that's a great success which we would like to share with the world. In the recent past, he created the digital platform eShakti for the self-help groups. Our next speaker for the day is Professor Meenakshi Rajeev. She is the RBI Chair Professor at the prestigious Indian Institute for Social and Economic Change. She has worked on this area, published many articles in reputed journals, has working papers, and therefore she has been also working on urban poor and financial access. Her recent books, Emerging Issues in Economic Development from Oxford University Press. She has also been working on A Story of Exclusion from Springer. She has visited a large number of universities in US, UK, Germany, France, and Norway, including Cornell University, University of California at San Diego, University of Essex. So her work on these issues That is why we thought she can come and share with us her experiences at the grassroots level. Finally, we have Mr. Siddhartha Sanyal. He is the chief economist and head research at Bandhan Bank. Most importantly, me and Siddharth used to work together at the Reserve Bank of India, and we have worked extensively on various issues. Before joining the Bandhan Bank, he was at Barclays for nearly 9 years, where he was the director and chief India economist. Sanyal's research work focuses on analyzing and forecasting key macro variables such as growth, inflation, fiscal situation, interest rates, liquidity, foreign trade, balance of payments, and exchange rates. Siddhartha also tracks international economic and financial market trends and produces detailed thematic research reports on economic trends and public policy. He has advised clients in different capacities in India, Asia Pacific, Europe, and US. He is ranked among the top Indian economists in multiple occasions and is a regular presenter at investor conferences and industry meets. He is also part of the shadow monetary policy that EGROW convenes, wherein we provide inputs to the RBI every 2 months. With this brief introduction of each of our important speakers, I would now like to invite Mr. Anil Kumar, Mr. Anil Sharma, former ED, RBI, to share his views. Thank you.
Thank you, Dr. Singh, and good evening to
Good
all
evening,
my
sir.
co-panelists. And a very good evening to my co-panelists and all the audience. And thanks for giving me opportunity to share our views on financial inclusion and the steps which we have taken and where do we go. Where we started, my broad approach would be in the next 15-20 minutes to see where we started from, what have we done, and where do we go going forward. So financial inclusion has been a policy objective of the Reserve Bank of India, as we all know, not only from any other aspect in terms of sociology or economics, but also from the perspective of a sustainable growth and greater financial stability. Because for the growth to be sustainable and stable, it has to be equitable, which means every segment of the society must participate and benefit from it. And it has to be diversified in terms of a diversified financial sector and the financial markets, which provide a diverse set of goods, products and services, which satisfy the diverse requirements of an economy like ours. So, and it has been a policy focus ever since the All India Rural Debt Credit Survey was initiated by Reserve Bank of India in 1954, when we realized that more than 93% of the credit requirements in rural areas were being met by the informal sectors. And there have been a series of steps which most of us or all of us would be aware of, which have been taken, which started with the promotion of cooperatives in the 50s, nationalization in the 60s and thereafter 70s, which led to the branch expansion, which led to the lead bank scheme, which is still operating with the different fora at the block, district and the state level, and which led to the priority sector lending, which comprises primarily agriculture, MSMEs, and the microcredit in particular, apart from some other segments. We set up institutions like RRBs, NABARD, NHB, SIDBI, and EXIM, primarily focusing on each sector, which we considered very crucial for the overall or equitable development of the economy, and which were not in a position to get credit, which otherwise would have been difficult for them to get credit otherwise. Similarly, we tried with different structures like SHGs, JLGs, joint liability groups, Kisan credit cards in the mid-90s, banking correspondents 10 years down the line, and currently the FPOs, farmer producer organizations, and farmer production companies that are being promoted right away. And we also had regulatory interventions, a large number of them. There's no, I don't have to go through all of them. permitting the BSBD or the basic saving bank account was another, introducing simplified KYC for these accounts was another, and so on. And of course, as we all know, for the last few years, digital payments have been mainstream in a big manner. So these and many others have been the steps which we have taken over the years. And the approach which has been underlying while we have taken these initiatives have been, number one, to provide the ease of access to the people at large, be it in terms of branch expansion or ensuring the ATM network or appointing the banking correspondents, ensuring affordability both in terms of time and money, so that the branches are within 5 kilometers radius. This is one of the milestones under the national strategy for financial inclusion, ensuring a banking outlet within 5 kilometers radius of every village which has more than 500 households, and uh, and allowing payments which are free of cost, etc., and collateral-free loans, etc. Ease of usage is one of the underlying approach while we have taken these steps, be it in terms of the small loans which can be given to the people who have been identified for various government-sponsored schemes, simplified form for the small loans, especially for the MSMEs, bilingual forms, so that every person of the society is able to avail of the banking services the way they want it, and collectivism, which was reflected in terms of the promotion of SHGs and JLGs. Similarly, another approach has been for ensuring safety and protection of the customers, because getting a person financially included is one part, but ensuring that the customer is protected, gets a particular level of customer service, and is able to undertake the transactions with reasonable safety and security. That's equally important. So there has been a series of customer service regulations over a period of years. There is a grievance redress mechanism which has been put in place, both internal in the regulated entities and also alternative grievance redress, which is the RBI ombudsman, which takes care of all the complaints which are rejected by the regulated entities. There's a limited liability regulation that if there is a fraud which has been perpetrated on a unwitting customer, then if the customer informs the bank in time, then there is a limited liability which can devolve on the customer, and there is a charter of customer rights. And financial education and financial literacy, which has been promoted in a big way, be it in terms of setting up of the financial literacy centers by the banks at the district level, or currently, which we are following as part of the NSFI milestones, opening of the centers for financial literacy, which is primarily a kind of a collaborative arrangement between the banks and the NGOs and the Reserve Bank of India and NABARD, which are funding it, for opening financial literacy centers in the ratio of 1 FLC for every 3 blocks throughout the country. We are going to cover the entire country by 2024, which will primarily take care of the spreading of the financial education and awareness to every nook and corner of the country. There is a multimedia campaign which you are all aware of, which all the regulators, including the Reserve Bank of India, launches, which are there for all of us to see. The basic financial education material has been made part of the again, which is being pursued in the case of 2 states which have not yet done it. And as you all would be knowing, in Reserve Bank of India, we have a financial literacy week every February, second week of it. So this has been some of the initiatives which have been taken, and the approach which has been underlying the initiatives which we have taken. What is the outcome? Outcome is the rural cadet, which was 93% with the informal sector in 1954. Today it is less than 28%. What is the branches per lakh of population? It was 1.88, roughly 2 branches per lakh of population in 1969. Today we have 10.86, which is roughly 11 branches per lakh of population. Adults with the formal accounts, which were less than 11% in 2011, today it is more than 90%, which we have. Gender gap in the account ownership, which was 20% into as late as 2014, which today has fallen below 6% as of now. And so those of you who keep track of the developments in Reserve Bank of India, you would have noticed that we published a financial inclusion index 2 years back, in the month of July, 2 years back in 2021, which had 3 dimensions, which was the access, usage, and quality. And it was published last year, updated last year. And as per that, on the dimension of access of financial services, we were at 77 on a scale of 0 to 100. We were at 77. On the dimension of usage, on a scale, again 0 to 100 scale, we are at 50, and on quality we were at 55. So, flowing from what we have done so far and the results which are there in front of us, we can see that while we have covered a fair amount of ground, which is also reflected in the readings of the dimensions of the financial inclusion index. In excess, we have covered on a 0 to 100 scale 77, but 23 is still unfinished agenda. On usage, we are at 50, which and we've come a long way, but we have a long way to go as well. And similarly, in terms of quality, we are at 55 and we still have a 45, which is the unfinished agenda. So one of the unfinished agenda would be 27% of the in terms of excess, 50% in terms of usage, and 45% in terms of quality. Another way to look at on the unfinished agenda on financial inclusion would be 28% of the rural households are still outside the formal financial system. 30% of the farmers' households are still not borrowing from the formal financial institutions. 86% are small and marginal farmers, which are which mostly find the agriculture unviable and unprofitable. 80% of the MSMEs do not have access to the formal finance. So this is another set of unfinished agenda which we have, that going forward we have to focus on this segment to take the financial inclusion ahead and forward. Another way to look at this unfinished agenda would be that while on excess we have covered on a scale of 0 to 177, but on usage and quality we are at around 50 and 55. So, therefore, going forward, while supply side of the financial inclusion has been largely taken care, even though we have some way to go there, but the most of the work going forward will have to focus on the demand side, which will primarily bring up the usage and the quality. So, whatever has brought us this far may not, the strategies may have to be slightly different, than the strategies which brought us this far may not exactly work for addressing the unfinished agenda. So what will work? A mix of the strategy. For example, some of the existing structures like KCCs will have to be mainstreamed and made more efficient. SHGs will continue to be mainstreamed and made more effective. Banking correspondents will have to become that much more prevalent, and they have to reach every nook and corner of the country where branches cannot be opened for various reasons. Similarly, we have to create new structures in terms of the farmer producer organizations or farmer producers companies, which can bring in aggregation and helps address some of the issues which we have in the issue of bringing addressing the last mile or the unfinished agenda. Similarly, technology will have to be adopted in a big way to address this unfinished agenda, both in terms of fintech and also in terms of the agri-tech, and adopt digitalization, because that is what is going to work. But it has to be careful in the sense that when we bring more and more people through digital means into the formal sector, which can help them to overcome the excess parameter or the usage issues or the quality aspects, we have to ensure that they are able to do the transactions in a safe and secure manner. Increasing formalization is another important aspect. 30% of the farmer households, 28% of the 28% of the people who are still borrowing from the informal sector, and 80% of the MSMEs, they have to become increasingly formal, and steps have to be taken to increase that formalization. And as I said a short while ago, we have to focus more going forward on the demand side. So this is the broad picture which I thought what we have done so far, what we have achieved broadly, just illustratively in a few parameters, what's the unfinished agenda is, and what we probably will have to focus going forward. Coming specifically to three broad segments, which is agriculture, which is roughly 1/3 of the farmers are still outside the formal financial system, and MSMEs, where more than 80% of the units are still outside the formal financial sector. If we can crack these two last miles, then I think the financial inclusion as a policy agenda would be largely served. So in agriculture, the aspects are 33% of the cultivators which are still outside the formal financial system ambit. It's primarily a last mile issue apart from the other related issue. So what needs to be done? Most of these farmers would be tenant farmers, which do not have the land ownership rights. So they are unable to borrow from the formal financial institutions, banks in particular. So there has to be a reform in the contract farm laws. The agri-tech has to be mainstreamed in a big manner, because that can help these farmers in terms of supply of the inputs, in terms of the buying of the output, in terms of providing extension services, weather advisory, analytics, etc., etc. Similarly, the fintech has to be leveraged in a big manner. The one in particular I want to mention, and since we have the ex-chairman of NABARD also sitting with us, they also have rolled out a platform for providing faster KCC loans to the borrowers of the rural cooperatives, RRBs and rural cooperatives. The similar pilot is being run by RBI under the RBI Innovation Hub for providing faster KCC loans to the farmers uh, all over the country, and they are in touch with each other to see as to how do we roll out this particular platform. So agri-tech, leveraging fintech, and reforming the laws can address this last mile in terms of the cultivators which are still outside the formal system. Similarly, small and marginal farmers, mostly they find the agriculture unprofitable, not only because their holdings are small, but also because agriculture per se, on account of the adverse terms of trade, and the farmers lacking the pricing power. Farmer is mostly a price taker and not a price maker. So to that extent, the agriculture is an unprofitable, apart from the fact that it is a highly risky venture. A large amount of operational risk is there in undertaking agriculture. So that can be addressed through a number of initiatives. One of them would be by promoting allied activities, which provides a kind of an income diversification, uniform scale of finance, which we have rolled out couple of years back, that there should be one uniform scale of finance in the entire state. So the scale of finance, which earlier was at the district level, is now being done at the state level, which gives a fair amount of flexibility for the farmers to get benefit from the higher scale of finance and aggregation. Aggregation in form of the FPOs, it can address both.
Anil,
Yeah.
you'll have to be brief. You've taken about 22 minutes. So can we request you to sum up in about a minute, because
Okay.
others in the line will then suffer on short
Yeah.
enough time.
So I'll finish at when I finish this, and thereafter, if there are any questions, then I can expand on that. So FPOs, the benefit of aggregation would be available to the FPOs. So that will also take care of the adverse terms of trade, and the farmers through lower cost and the higher realization can be a price maker and then be a price taker. So this is what can be done in case of agriculture. On MSMEs also, the finance. So far we have been focusing on the giving loans based on the collaterals, but capturing the cash flows of the MSMEs and lending to them would be a challenge. For that, a data capture is required at the level of the regulated entities. That is required. More and more MSMEs have to be formalized, and the quality and the technology which they employ has to improve, and their size has to be scaled up. More than 90% of the MSMEs are micro units, which limits their ability to sell effectively in the markets. So I'll stop here for the sake of time. If there are any questions related to the other aspects related to financial education, financial literacy, or customer protection, I'll be able to happy to answer later on. And if there is any supplementary on agriculture or MSME, I'll be happy to answer. Thank you very much.
Thank you, Mr. Anil. Thank you. It's very good coverage, but because of shortage of time, sorry, we had to request you to wind up. With this, let me now move on to Mr. Chintala, who has worked extensively on self-help groups, and of course, he was the chairman of NABARD, so he knows at the grassroots level how it is all played out. Mr. Chintala, please. Can't hear you. You'll have to unmute yourself.
Sorry, I'm muted.
Yeah.
Thank you, sir. Good evening.
Yes.
And I had put a timer because I don't want to get a reminder from Charanjit ji. So first of all, it's a very nice thing that to interact with all of you as to really what exactly is the financial inclusion that is happening. Anil ji has given a overview of entire thing, really how the institutions are there and what are the things. But thing is, I would like to go into the specifics as to really how the financial inclusion had happened in the country and what are the issues which we have faced and which we are still facing. Now, if I just look into the maybe a little bit of a history, actually, that the financial inclusion per se has started in India somewhere in 1970 with the nationalization of the banks. Before that, actually, that many people are out of the banks coverage. Then subsequently, the priority sector lending norms have been fixed, and so some amount of money has been done. But still, I can say that when we were starting, because I was there as a very junior law officer in NABARD, an SAG movement, that brief first document was being done, that we found that more than 80 to 85% of the women in the country, particularly the rural women, do not have banking account at all. So first of all, that time actually we used to say very often that if a woman used to go to the bank, the banker used to say that you bring your father, otherwise the husband or a son. But thing is, they never used to recognize the woman as a kind of a beneficiary or maybe the bankable kind of a person. So now that entire inclusion, actually, if I really look into it, actually, it started with the self-help group movement in the country, because till that time, actually, we never made any kind of a systematic attempt to rope in this kind of a underprivileged people who are left out and who are out of the ambit of any kind of a banking coverage. So now, with that, the starting of the SHG, and really, what are the things actually which that time actually we were harping and actually we tried to work actually in consultation with the Reserve Bank and government. There are three things that were woefully lacking that time. First of all, most of these women were not bankable. This is what the bankers' opinion, and they were not opening their accounts. So actually, that because they don't have the banking habits, actually, this was what the contention of the bankers that time. And so first we thought that actually women should be given the banking ethics and also really how to form this. That is how actually the thrift has been introduced to the women groups. Actually, if you really look into that self-help group movement, the 20 women who are otherwise not having any idea really what is a bank, really how the things will happen, actually we brought them together and gave them actually now every day you save maybe every day or every month save some 5 rupees or 10 rupees. Then afterwards you start rotating yourself and you see really how the money will grow and really how the interest rates are calculated. And also after 6 months, actually they were all, the groups were made a kind of a beneficiary, a kind of a thing in the banking system. And thanks to Reserve Bank, because after the persistent efforts of NABARD that time, because we ran a pilot project, and the pilot was so successful, which we had done, saying that women were the best borrowers because they can repay the money much better, and even whatever be the interest rate, because women have got that value for the money, and actually they have a concern for the family and the children and their progress. So that's why the very tagline that time was, an empowered woman will empower the society, and actually an educated woman will educate her family, and likewise the things have happened. So now we started with a contention, that is with the intention that time that we should first bring, because there was no word called inclusion till 2005 in this country. Actually, financial inclusion itself as a terminology was coined in 2005. Till that time, actually, we were using so many things. But otherwise, I can say that the very basis of maybe bringing this woman, all these people who are outside this entire banking purview, are that giving a kind of inclusive growth, ensuring inclusive growth to them by giving access to the formal banking system, and empowering them to see really how they can graduate in the next phase of life. Actually, that is how it is. Then subsequently, that the three major components which were done was that the woman should be having three kinds of access to this time, because that time it was the savings, a safe mechanism for savings, and a kind of a reliable kind of institutional network to give them the credit. And the third one is the remittance. Now, actually, that if I really look into it, in the last 35 years, we made so much of a journey. One is thanks to the liberalization, thanks to the banking technology undergoing a transformation. Then thanks to Aadhaar, thanks to PMJDY, and thanks to JAM, and also the way the tele network has come into this one. Actually, the financial inclusion had become more democratic now because of this telecom revolution in the country. Because if I say that telecom revolution has done as much as what the banking industry has done for that entire financial inclusion. This is what actually we could say. Now, I'll just try to see really how we have done. Actually, that first in the initial years, we have brought the women together, and slowly, actually, it has become a kind of a movement. And right now, we have 120 million women connected through the self-help groups to the banking system. And this 120 million women are there in around 12 million groups, that kind of a system which we are having. So now imagine really what kind of a power. And many a times actually that in NABARD, actually when I was chairman, actually I used to tell, still actually we have a long way to go, because when we started the SHG movement, the population was just around 85 crores or 87 crores. Today we are 140 crores, that is 1400 million. So 50% are women or children. So now if you just take the kind of a division, out of 1400 million, 700 million are women, girls are women, of which actually if you just filter out the girls and the very old ladies, actually at least something like around 500 million women are in the productive stage who can contribute to that economy of this country, and of which really how many were having access to the credit. This is a very big question actually, which everyone was trying to address through the financial inclusion. So now this is where actually quite a lot of work actually was done by every institution under the guidance of Government of India, Reserve Bank, and institutions like NABARD and others. So how we have done it? Now out of this 400 million women, roughly 120 million women were connected to the banking system through the self-help groups, and another 45 million were through the microfinance institutions. Now, actually, here I would like to tell that what exactly is the financial inclusion which we are all aiming at. Actually, sometime back, Honorable Prime Minister somewhere he spoke actually what is meant by financial inclusion in his vision. He says financial inclusion is nothing but access, inclusion, connectivity, ease of living, opportunity, and accountability. Actually, all these things will work out to be a kind of a financial inclusion. So if that is the case, really how we are able to do it? Now, actually, that since 87 to 2004 or 5, most of the SHG movement, and subsequently it has become the SGSY movement, and ultimately now it has become NRL. These things are happening. But when the financial inclusion term has been coined, there was a concept called the no frills account. Actually, before the PMJDY, the no frills account campaign was launched by Reserve Bank of India, and we used to monitor. There are many districts which have declared that they have 100% no frills account. But anyhow, when the PMJDY has come, actually, that it was a kind of a campaign which was launched in such a way that now today we are having close to around, I think, 450 million accounts of the PMJDY. And of these 450 million accounts, there are quite a lot of savings. But even today, whether all these PMJDY people, because now if they have safe access to the savings, the second cardinal principle of financial inclusion is the credit. Whether are they getting the credit? Actually, this is a very new question. Actually, here I would like to say that many of them are still not having access to the credit. And today, actually, that we can say that in this self-help group movement and the microfinance institutions, which are basically the institutional or maybe kind of a system which is giving money to these people by way of credit, because most of the people who are at the bottom of the pyramid, they don't have any kind of a securities to offer, and banks have to give money just without any kind of security on a kind of a peer group kind of a security kind of a thing, so called social security collateral. So now the SHGs and the MFIs are working on this kind of a social collateral, and actually it will be a music to the ears of all the audience. Actually, in 1992, when we first started the pilot project, it was a zero credit, only the groups have just started. Today, every year, I'm telling, every year I'm putting in inverted commas, every year, the Indian banking system and the para banking system, which includes NBFCs, MFIs, and also maybe everyone, they are doling out close to around $40 billion worth of credit. $40 billion, which is equivalent to close to around 3.5 to 4 lakh crores of a credit, is being given to these women and these people at this bottom of the pyramid without any kind of a collateral security. And the recoveries in both the streams is close to around 96 to 98%. Actually, that is the beauty of this entire financial inclusion concept of this country. So now, having said that, actually, that have you, because now we have got maybe network everywhere, but at the same time, India as a whole is not uniform. Now, actually, if you look into this entire financial inclusion, the microfinance revolution, actually where every one of us working, it is still actually in some pockets or in some geographies. It is not everywhere. Now, if you just look into the entire this $40 billion which we are looking at it, I can say at least close to around 20 to 25 billion dollars is going to so few states. That is maybe all the southern states, maybe the states like Maharashtra, states like maybe a little bit of Rajasthan, then Bengal, Bihar, Orissa. These states are getting. But thing is, the people where there is a heavy overload of poor people, where actually the financial inclusion is a must and it is a necessity, like Uttar Pradesh, Chhattisgarh, even Gujarat, parts of Rajasthan, Maharashtra, they are still having a very little kind of a loan outflow to these people. So that is where I say that we have done wonderful jobs so far, but at the same time, there's quite a lot of a thing to be done, because where the poor overhang is very high, there these financial inclusion efforts are still not very substantial, though the networks are there. Now, the third cardinal principle that time when we are doing the financial inclusion as to what we said, the remittances. At one point of a time, remittance was a very, very difficult thing for the people to do it. Now, because we used to see that till even 2012, 13, or even beyond 2014, 15 also, if somebody, a worker from Orissa or Bihar who was working in Bombay or Surat, if they have to remit even 1,000 rupees, they are spending close to around 50 rupees or 100 rupees for the agents to send the money. But thanks to the fintech, thanks to the revolution in the mobile, and thanks to the kind of a systems that have come with regard to that UPI kind of a system that has developed, where now phone pay, GPay, Paytm, or you just name any kind of a thing, where now actually seamless transfer of money is happening. And here I can say that as an institutional network, actually Reserve Bank, NABARD, and under the aegis of Government of India had done a wonderful job in rolling out this kind of a network, because we were under the Financial Inclusion Fund and Financial Inclusion Technology Fund, which were housed in NABARD. We used to give quite a lot of things, whether the POS machines to the people at the ground level, to the traders, to the bankers, and also ATMs to the bankers, and also conducting the financial literacy programs so that the people will get access, that aware of really how to do the things. And also that PMJDY, the way the campaign has been done, and now that Aadhaar has been linked, and with this UPI kind of a thing, where suddenly that globally actually nowhere such kind of a system has been rolled out. Now today, even the smallest of the small, whether it's a fruit vendor or maybe anybody, they are not even asking for a change. They say that simply that fellow will flash you a kind of a QR code and you are transferring the money. So in that process, actually many people stop taking the purse. Actually now your mobile is the purse. Earlier we used to really wonder. So now I can the remittances, and also with regard to maybe spending money has become much easier. But still, to spend the money and to do the remittances, people should have access to work and the credit. And that is where actually now we have to. So I'll say that the next step of financial inclusion is not just harping on these small things which which we already tackled. So now it is how to create livelihoods to the people so that they will earn money and their accounts will have the money, so that actually they can have a kind of a decent living by working through all this phone pay, GPay, and everything where they can do it. So now how we are doing that, we will say that now that there are three segments in the rural or maybe the entire urban population also. One is that always the people at the bottom, whether it is in the rural or urban setting, they need to have a decent livelihoods. Really, what are the things being done to that? There are so many things that happened. That is that NRLM, the National Urban Livelihood Mission, they are doing some work. But at the same time, if I really look into the statistics, because yesterday I was reviewing it, even with all these $40 billion which we are pumping out every year through the banking system and also the MFIs to the microfinance. The average loan is just 20,000 rupees, which is equivalent to $250 or $240. Now, in 20,000, actually, you do not have much of a flexibility to do a very great kind of a activity, which will give you quite a lot of money. That is where now the time has come for banking system for everyone to see really how this average loan is pushed up to minimum 50,000 or maybe beyond that, so that they can start their own enterprise and they can get the benefit of everything. And the second thing is giving them a kind of a training where actually they will take up the livelihood activities on a sustainable basis. NABARD had created a project called the LEDP, Livelihood and Enterprise Development Project, where the SHG women who are otherwise able to transact business in the normal course, but not having access to the thing, they were all pulled up and they were given a special training so that these people can have a very decent livelihood. Actually, quite a lot of things have happened because we have seen, and in many places, actually, in the presence of the chief ministers, when we reviewed, the women themselves say that after getting trained in LEDP and getting the money from the banking system, they're earning close to 10,000 rupees a month. Imagine actually a rural woman earning a 10,000 rupees is a very, very kind of thing. So this is where actually we feel that we should do it. And the third one, and the other one which I would like to say is that there should be a mechanism, end-to-end solution for everything, whether it is for the farmer and also for the rural poor or urban poor. Now, RBI Anil ji was talking about the agriculture and really how the things are happening. Actually, agriculture, quite a lot of things are there. Generally, we don't include that agriculture thing as a kind of a financial inclusion because these people are having some kind of an activity. But otherwise, actually having seen that agriculture as this one, now actually what are the things which we are doing with the agriculture? One is that Kisan credit card has been created, which itself has been electronic form. It was converted so that actually these people can transact money business anywhere, whether it is a fertilizer dealer, seed dealer, or anyone. And the next one is to create a kind of a mass to the people, as maybe critical mass. Actually, the farmer producers organizations concept has been conceived and rolled out by NABARD, and which we started in 2010, now has become a Government of India program also. Today, country as a whole is having close to around 16,000 FPOs or FPCs, encompassing close to 1 crore of farmers. And there, they are not only taking the new kind of an agricultural activity, but thing is they got a kind of a power to negotiate both for that lower price of the inputs and the higher price of the output. And also they are establishing the processing units. For that, actually, the money is also being given. So that is where the inclusion is happening in much way. And the other one, I'll say that why the end-to-end solution, in the case of eventuality, really who is going to come to the rescue? That is where NABARD has created NAB Samrakshan as a kind of a credit guarantee subsidiary, where the FPOs, which they take loan up to 2 crores, they will be given credit guarantee up to 75%. And 1 crore 85%. And the safety mechanism had really done. I have finished 20 minutes. I will take 2 minutes, Professor. So now this safety mechanism is very good that we can do. So likewise, in case of MSMEs, the TREDS platform has come because earlier MSME, big or small, they are having all the problems with regard to the getting the money paid out for their bills. But thing is now this TREDS platform had eased such kind of a thing. So now the similar kind of a thing should come for agriculture and also maybe the SHG related products. The moment they supply goods to somebody, against that bills, actually they also should be able to go into these platforms and raise the money so that it's very easy for them to do this. So that overall, I can say that now today that government has got that PMJDY, PM Jana Bima Yojana, Swasthya Bima Yojana, APY. These are all the some kind of a mechanism for the financial inclusion is being done by the government. But at the same time, quite a lot of a work has been cut out for the institutions, banks, developmental financial institutions, NBFCs, MFIs, and everyone, to see that all the people who are brought into this kind of a financial inclusion network and who are given access to the banking system and the para-banking system, they should be adequately credited and they should be given a such kind of amount so that actually they can pursue the activities and make maybe profit out of it, and at the same time they can also rise up in the ladder, and that is the ultimate aim. And finally I will say that really what would be the scope of this entire microfinance or the financial inclusion in the credit metrics. I'll say that now actually in India we are having 1400 million people, of which 700 are women, and now of which only some 500 million are the people who are in the stage to accept or maybe to get the credit out of it, of which only we are able to tackle so far around 145 to 160 million. So still 3x of the people are still left out of this kind of a credit system. And the next one is that 20,000 we are giving, but thing is the requirement is close to around 50 or 60,000. So another 3x is there. So if that is the case, from the present $40 billion, if you multiply by $40 billion by 7 or 10x, actually that is the requirement of the credit in the country. So that when the country is moving up from this present $3 trillion or $4 trillion to close to around what everybody says, something in 2047 we are going to be somewhere around $25 trillion. If that is the case, this mass of the people who are denied access so far, or even today they are not being given the kind of a credit which they require or maybe the facilities, actually they should be given this much amount so that they can also become part of this economic the financial engineering and also the prosperity everyone is enjoying, and this country will see a great kind of a growth. So this is what actually my views on the financial inclusion, and I'm thankful to Charanjit C for giving me this opportunity. Thanks a lot.
Thank you very much. I'm sure much to learn for the G20 countries from the effort that has been put both by the RBI and NABARD. Thank you so much. Now let me move on to Professor Meenakshi. Professor Meenakshi, are you there?
Yeah, I am there, and I would like to show some slides because my previous speakers have given a good overview and the policies, and I would like to show, to complement this, I would like to show some hard data. So therefore, I would like to share some my slides.
Sure. So are you going to attempt to do it, or do you want us to do it?
Yeah, I am doing it now. Please see whether you are able to see my slides.
Sure. Yes, we can see. Excellent.
Okay. So very good evening to all, and also thank you very much to Professor Charan Singh for giving me an opportunity to speak in this forum where such eminent persons are speaking, practitioners are speaking. Now, financial inclusion, as my previous two I'm not able to, okay. Financial inclusion, the importance of it, we have already heard. And in the economic literature, long back, people have talked about a well-functioning financial system. In fact, in 1912 itself, Schumpeter talked about well-functioning banks can even spur technological innovation. And subsequently, Hicks talked about how the financial system played a critical role in industrialization in England. And subsequently, a growing body of empirical literature has developed at farm level, country level, and cross-country level, which demonstrated a strong link between functioning of the financial system and the long-run economic growth. Levine and King and Levine, many other economists have worked on that. And therefore, to have an inclusive growth, we must have an inclusive financial system. Now, if we do not have an inclusive financial system, there is financial exclusion. There can be various adverse impact and there are a lot of research on that as well. For example, Jacobi, who studied the household level data in Peru, has shown that if there is financial exclusion, that can actually increase child labor in the economy and reduce children's education. And Jacobi subsequently also studied South Asia and some Indian villages and showed that how lack of access to credits basically through financial system, again, he showed the similar results where reduces the children's schooling when there is any transitory shock, some kind of shock in terms of environmental shock, floods or anything. The household not having access face much worse situation in terms of even children's achievement compared to household with having financial inclusion. And financial inclusion, when we talk about, we feel that it is, of course, the entrepreneur, maybe the smaller, even the smaller entrepreneur, they kind of benefit from financial inclusion, but it is also established by researchers like Levine and doing a cross-country studies that it can boost the incomes of the poorest quintile or population living below $1 a day. So this actually shows the importance of financial inclusion. If we look at this financial inclusion and discourse in our country, of course, it has a long history. Already my previous speakers have talked about, but Rangarajan Committee 2008 actually talked a lot. It is one of the most important committee after kind of liberalization, which talks about 4 important components of financial inclusion, which are savings, insurance, remittances, and credit. Credit is last but not the least. It is the most important one. My previous speakers have also emphasized that. But remittance is also very, very important in our country, where a large number of migrant labor goes from one state to another state and they remit their funds, and therefore having a secure way of remitting their funds assumes considerable importance. Now, among these 4 components, the 2 aspects are very important, which one is access and other is uses. And I'll show some data regarding that. Now, from my various field surveys and various studies that I have done, even for NABARD, RBI, as well as CAFRAL, we have seen that the financial exclusion, the nature of financial exclusion in rural and urban areas are different in nature. For example, in rural areas, not having banking branches, overcrowded banking branches, etc., can be a concern. Whereas in urban areas, we see that even when bank branches are nearby, people are having bank accounts. They actually self-exclude themselves from the financial system and saves money in, say, things like chit funds or borrows money from traders and so on and so forth, and without going to, do not go to the formal financial sector. So these problems are there, for exclusion problems have different nature. And secondly, there are studies, a few studies I have seen, which actually constructs financial inclusion index. My previous speaker also talked about index creation by Reserve Bank of India. And researchers also have created index. But when we create index, usually they ignore, one is rural-urban division, and other is the role of cooperatives. The cooperative bank, from my own experience from field service, as well as from the NSSO data analysis, we see that cooperative banks, when they function well, they give a very good kind of access to the poorest section of the rural population, especially primary agricultural credit societies. We know that cooperatives have problem of non-performing asset, etc. But then when they function well, they give a very good access to the poorest section. And therefore, we think that the role of cooperatives in financial inclusion must be highlighted. Now, I'll just quickly like to show some of the indices we have created by using both rural and urban data separately and using the cooperatives for the period 1994 post kind of financial sector reform and up to 2007. And we constructed two separate indices, as I told, and then for rural and urban, and then we combined them. And we used a large number of indicators like demographic outreach, geographic outreach, deposit mobilization, and then we also incorporated cooperatives data packs, primary agricultural credit societies outreach, etc. for the rural index. And similarly, we use indicators of outreach, demographic, geographic, deposits, credits, etc. for the urban index. And quickly to show some of the results here is that you can see the last two columns, and where we see that the Goa is the best state in terms of financial inclusion, and followed by Maharashtra, Karnataka, Kerala, Tamil Nadu, and Haryana. These states have quite, Goa has a much better index, but other states have quite closely kind of packed index. They are all kind of well financially included. And Odisha, Rajasthan, Uttar Pradesh, these are the bottom ones, especially Bihar and Assam have lower, very low financial inclusion index. So thus the financial inclusion kind of, there is a diverse experience across states. And here we are showing the rural financial inclusion index and urban financial inclusion index. The top one is urban and the bottom one is rural. If you look at the rural financial inclusion and urban, one can see that both are actually showing increase. And that my previous speakers have also shown, we have improved considerably in financial inclusion. But you can see that the urban financial inclusion has increased enormously compared to rural, and there is a huge rural-urban gap which is increasing over the years. And it also shows that the economic activities of urban and rural also there is a huge gap, and because this is partly because of which we are also seeing this gap in financial inclusion. And that, of course, have other ramifications like kind of migration of labor, overcrowding of urban areas, etc., etc. Now, coming to the four major components of financial inclusion, I would like to show some recent data of NSSO, which the 77th round data has just come out. And if we look at the access, what do we observe? We observe that access has improved enormously. And now we have about 85% of individuals have access, have some bank account. And if we look at these are the individual data, if we look at household, I am sure will be almost 100% household have some member will have a bank account. But when we come to savings, one can see that the deposits in the previous NSSO round and the current round I have compared here, and you can see that occupation wise I am showing here, and the agriculture sector where all the deposit accounts, you can see that very large number of deposit accounts. So everybody almost have an account, have had some deposits. But if you look at the last column, which is actually showing the savings in some interest, good interest bearing kind of avenues, like say a small fixed deposit or something like that, that percentage is still lower. So though from 2012 to the recent round, we have improved considerably. We have a long way to go in terms of having savings which are some kind of interest bearing, because this deposit accounts may be showing some amount of money, perhaps because they have some direct cash benefit transfer, that money is lying in the account, and but actually to have some savings which can give for a save for a rainy day is not much. Next, coming to the issue of insurance. Now, you can see again the life insurance percentage of household is about 18%, which has improved but remained quite low. Crop insurance, only about 20 to 24% land is under crop insurance. We have a lot of effort has been made to improve the coverage of crop insurance, but it has not improved so much. So there also we need to improve. And non-life insurance percentage is really meager. There's not much data on remittance as a part of financial inclusion in NSSO. Therefore, I come directly to the important issue of credit. Now, in credit, if you look at the farmers' access to credit has increased enormously. You can see from 22%, it has gone to 32%. There is a positive change in access to credit, and it is seen across all categories of people, except for scheduled tribes. If you look at various social class, I have analyzed in terms of social class also, you see scheduled tribes have a kind of considerably lower access, and female-headed households have a much lower access than the male-headed household. But then the positive change is seen all through, but then only 32% of farmers are accessing credit. And this about this aspect also, there is a lot of discussion in the Rangarajan committee report also, when he looked at the 2005 NSSO report and farmers' access to credit. Now, looking at now the farmers in terms of land holding, this is the marginal farmers, and you can see that 71% of the marginal farmers are still dependent on non-institutional loan. Only 28% are taking institutional loans. These are the land holding farmers, but they are also depending considerably on the non-institutional credit. Now, looking at the dependence on the money lender, and we can see that the money lender's dependence actually is not so much talked about in the literature of financial inclusion, but I think that's a very important indicators one can look at. Now, among the non-institutional sources of credit, there is friends and relatives, so which one can take loan from. So we have therefore separated this friends and relatives part and concentrated only on professional money lender, agricultural money lender part. And you can see that has the financial inclusion reduced dependence on money lender? Answer is yes. Yes, it has reduced, but still considerable portion of population still dependent on the money lender. So it has reduced, for example, from agriculture farmers class from 20% to 14%, but then they are still dependent on the money lender. And other categories of people also see dependence on money lender. And again, coming back to this scheduled tribe category, you can see that their reduction in dependence of money lender is the lowest. So there are different categories within the population which needs actually special attention, like female-headed households who are, for example, who are independently, who are doing farming, cultivator households, which are female-headed, or scheduled tribe household. This kind of categories also need special attention in this financial inclusion program. Now, coming to the dependence of money lenders, I would like to show one of our analysis, which I think is interesting. So we have looked based on our index that we developed. We did some econometric exercise, which I will not get into, but we looked at the presence of cooperatives and the presence of commercial banks. Now, one can see these two pictures basically shows that if the cooperative bank's presence increases, that is cooperative bank index increases, the dependence on money lender reduces straight away. There we can see a dependence on money lender reduces. However, if the presence of commercial bank increases, there is a threshold level up to which it has to go. Only then one can see a decline in dependence on money lenders. So initially, if you have a few commercial bank, it may not work. You must have a threshold level, which we estimate to be 0.07, threshold level of commercial banks, then only you can reduce the dependence on money lender. And so the role of cooperative bank is, I would like to say, is important in reaching out to, especially in villages, reaching out to the poorer section of the farmers. And the governance of that is important to therefore change. And in the recent budget, Srimati Nirmala Sitharaman has talked about and allocated funds for digitization of PACs, and I think that is a very important move which can help reforming them. Now, finally, coming to the cross-country comparison, which is based on the global Findex data, which is a cross-country data given by World Bank. And we can compare India with some of the other countries, where I'm showing the data from 2014 onwards, where we have about 53% of accounts, which have now increased from 80% to about 87% of people having bank accounts. And we compare well with many other countries. So we have done fairly well in giving people access. When half of the population did not have access, now almost people have access. But if we look at some of the other indicators, for example, owning a debit card, where we were 22% of people, then 33%, and it has increased to about 39%. So compared to, say, South Africa at 59, 60%, China at 76%, we also have to improve in those aspects. There is scope for much improvement. Having an inactive bank account, India is at 33% people have inactive bank account. They have a bank account, but not operated much. And that is 38% and 35%. So remain more or less stagnant. And this is one area where, say, South Africa only 3%, China has 2%. So therefore, this is one area where we need to improve. Mobile money account, we have improved many-fold. From 2%, we have come to 10% now. But compared to our peers, we are still lower, and we can move ahead, much ahead. So,
Professor,
yeah.
Yes, thank you.
Last slide.
Please wrap it up.
Yeah.
Thank you.
So therefore, we have various, we have achieved, especially after Jan Dhan Yojana, we have achieved considerable progress. But these are some of the areas through hard numbers I have shown where we have scope for improvement. Here, the three things I would like to just briefly state and end my deliberation. That one is the agent banking, which can play a very important role. Actually, we have a long history of banking correspondent model, but which were not so successful. But now these agent bankers, they actually, from my own field survey, I could see that they actually combine several activities. And this is happening because of this telecom revolution, that they combine banking activities with other activities such as Aadhaar card giving, PAN card giving, insurance giving, so many different activities they combine. And therefore, banking activity, if their profit is not considerable, other activity compensates for them. And because of combining of so many activities through this, because of this internet facilities, they have been able to earn reasonably good profit. About our estimate is about 20,000 profit. So this is working well, but of course, they bring very small kind of depositors' money, so they have a little bit of concern about their relation with the bank per se, because many feel that banks often do not consider them as valuable partner because they don't bring big customers, they bring very small customers with small money. Second is the self-help group, which already talked about, so I will not talk much. Only thing I want to say is that this helped women to get access to money, but that access to credit, but that credit volume is really small. A woman as an individual, when goes for credit, for example, a woman farmer, that also access should also improve. There is disparity in that. And financial literacy, basic financial literacy is something very, very important. And that, of course, will come also with the usual literacy. And what we have seen, that if there is a person is illiterate or a person is have primary education, it doesn't make any difference. You have to have a threshold level of education of secondary level. Only then there is some difference of their access to financial services. So the usual basic literacy of the people, especially women, especially landless farmers, these are categories which we must emphasize. So thank you very much. If there is any question, I can discuss them at the end. If there is
Thank you, Professor Meenakshi. I thought it was an excellent presentation, but because we are short of time, let me move on and invite our last speaker for the day, Mr. Siddhartha Sanyal, the Chief Economist at Bandhan Bank. Siddhartha.
Thank you very much, sir. Thanks for this particular opportunity. And it's quite a privilege for me to be here in this particular panel with all the illustrious speakers who spoke before me. In terms of the broad initiatives on the part of government, Reserve Bank of India, RBI, or in terms of whatever is the comparative situation of financial inclusion in India vis-a-vis some of the other countries and how we have progressed, I think my previous speakers have presented beautifully. I don't think I'll be able to add much, so I don't even want to get in that particular area. But having said that, given my association with Bandhan Bank as the Chief Economist and Head of Research for about nearly 4 years now, I see a few things from being within the system, if I may call it. And I'd just like to quickly, in the next 5 to 7 minutes, want to share some of these things, and possibly that should help some of us at least to appreciate what some of the various aspects of financial inclusion that the industry is facing at this moment. In my view, and as data clearly presents, that in the last at least 2 decades, the rapid progress in financial inclusion came because we saw a large uptick in all the major frontiers of financial inclusion, that is credit, deposits or savings, insurance, and remittance, everything. And my sense is that we will continue to see that. Obviously, some of the specific government schemes led to some very significant one-time uptick, but it looks like that it has gathered the necessary critical minimum momentum, if I may call it, and it's possibly has created some kind of awareness when we deal with people compared to our institutional history, what used to be the case 10, 15 years back compared to today. That clearly shows it has made a significant difference, and it can actually have some kind of a very positive snowball effect going ahead potentially over the next 1-2 decades as well. Having said that, I would say that if I say last 10 years or 20 years, whichever way we see it, had been a huge significant journey, and if I may call it financial inclusion version 1.0 in case of India, possibly in this decade, we are looking at a version 2.0 as well. But I'd like to say that it's not necessarily only positives. There are a mix of great opportunities and significant challenges to deal with also in this particular decade. Now, what is the big difference compared to what we have been seeing in the last decade, the last 2 decades, compared to what we might be seeing going ahead in the next 5 to 10 years? One big factor is definitely digital and data. And I'll come back to that. But before that, let me take a step back. When we say that we have made a huge difference as an industry, the banking and financial services industry in this particular country, to make financial inclusion move on a rapid pace, we all know from the macro data, but some of the micro data can actually be mind-boggling still, in my view. For example, I can share the example or experience of my own bank. This is one particular bank, while this is a universal bank, but at this, because of its legacy, we have a very significant portfolio, which is microfinance. And I'll just share one data point here. We have, and please don't see that as in terms of talking in, I'm trying to say what we are doing as an institution, just an anecdotal data point. Say, we have about 40 to 45,000 people working in the field, working in the area of microfinance. On an average, in a day, they travel something like 12 to 15 kilometers in a day. If I take 12 kilometers and if I take roughly about 40,000 people, we are talking about physically a person only from my bank. I'm talking about all the field force of my bank travel roughly about 5 lakh kilometers a day. The distance between Earth and Moon is little less than 4 lakh kilometers a day. And one bank working partially in the area of financial inclusion and microfinance only, our field force move more than the distance of Earth and Moon every single day of their operation. Why I mentioned this particular thing? The enormous need and role of physical high-cost movement that is involved in this particular activity. Now, if this particular the financial inclusion drive had to depend on this kind of activities over the last 10 to 15 years, my sense is that going ahead with the advent of digital and data, we can actually grow at a much rapid pace and at a much more with far greater efficiency without having without putting in so much of effort physically. But what is there today, the big advantage is that we are channelizing as an industry. My sense is that this industry is channelizing its efforts and bandwidth in terms of knowing the customer better from a data analytics point of view. And this is possibly a huge advantage this particular industry is enjoying at this moment. So the entities which have fantastic in-depth ground level knowledge of their market now is getting the tailwind of fantastic data analytics and digital initiatives at the moment, so can be a lot more effective and efficient very rapidly. We are seeing that advantage. However, what I would like to highlight as an area where we need to be very, very cautious is that if the initiative, there are two fronts, there are twofold caution I would like to highlight. One, we all know, we all discussed that when the digital financial inclusion is becoming the norm of the day, it's extremely important to enhance financial literacy, and digital financial literacy. I think there is huge focus, but at the same time, the other area where there is not so much of a discussion, that often there is some kind of a thought process coming that, okay, only with data and digital, we can make a difference without complete knowledge of the market and customer and local knowledge. I think it's very important to understand for this particular industry that the next level of financial inclusion drive or financial inclusion version 2.0, if I call in case of India, would have to come on the digital and analytics, digital and data benefit would have to be on top of the brick and mortar format or the physical format or the local knowledge format, whichever we call. And one very important aspect here is that constant training and skill upgradation of the field force and people who are involved. I think that's why it's very important to encourage all the entities involved here to go for a model with long-term sustainability and long-term focus rather than thinking about turning very profitable or trying to see it as an area of supernormal profit at any given point of time. That might be a very, very risky proposition. And it's very important the entire industry and self-regulating bodies also do appreciate that particular aspect. Overall, I think the granularity and scale, which we have seen over the course of the last 10 years, otherwise can actually be benefited very significantly. My sense in terms of whatever little I have understood in this particular segment is the success of this particular model will remain going ahead also in terms of the simplicity of the products and services. We have seen from our own experience when the products and services which we managed to keep very simple have invariably succeeded. The products and services which are a little more complicated involves a little more optionalities on the part of both our staff who are providing the ground level assistance to the customer as well as in terms of the customer typically have often been a little more challenging to make people understand. The other part is that whenever we have been able to invest in training our people in those geographies and those areas, we have succeeded a lot more. The growth of the industry or the growth of the segment in our case also we have seen had been far more where we have been able to focus a lot more in terms of training and retaining people for a very long period of time. And last particular point that I would like to highlight, which possibly is becoming very, very important these days, given the importance of digital financial literacy. One suggestion that to this particular forum I would like to flag that it's very important not only for all banks and central bank and regulatory bodies to talk and promote this. Possibly there is a need today to think about even more structured approach towards financial and digital financial literacy. For example, if we can think of something like this particular area, digital financial literacy or financial literacy becoming an eligible expenditure or an eligible area for corporate social responsibility related spendings, etc. in general. So just to sum up in the next one, in 1 minute, I would say that we have seen fantastic growth and progress on this particular front in this country over the last 20 years. It came because it came from all the 4 major frontiers like savings, credit, insurance, and remittance. Going ahead, we do think digital and data analytics is going to give a fresh fillip and impetus at least for the next 5 to 10 years, if not for longer, for all these particular aspects. Having said that, I would like to say that it's very important to ensure 2 things. One is we contain digital and financial frauds and try to focus on from a regulatory and all the government initiatives also a lot on this. And also we need to, as an industry, we need to understand in case of this particular area, it's very important to stay very long-term focused. Nothing pays you more than training your own employees and training and helping the customers train themselves. Wherever we could do that, we have seen fantastic success. And the last one specific suggestion is towards having a kind of some official focus, some policy focus in terms of, for example, the CSR, CSR eligibility of financial literacy, financial literacy becoming official or an approved on the approved list of CSR spendings. So I'd stop here and happy to take questions if there is any.
This was a fantastic session on financial inclusion. I've been working on this area for a very long time. As Mr. Anil was mentioning, at the RBI, the first time we worked on the report on trend and progress of banking in India, where we included a significant component of financial inclusion. I was the director research in charge at that point of time. I did a survey in the Kolaba area and went up till the tiffin, the Dabba Walas in Worli, did a study of what are the major issues that really face and that face these people, and how do we go about doing financial inclusion. I still remember the cobbler sitting right in front of the State Bank of India branch, very close to where the RBI flats are in Kolaba, and the fear that he was expressing that he cannot enter the branch because the gunman standing there is standing there basically to kill him and ensure that he does not enter the branch. This cobbler also told me, sir, all these people who are sitting in this branch, all their shoes and their chappals and of their family, I repair them. But in the evening before they go, they collect it from me. And when I told him you can open a bank account there, he said, no, that's impossible. That's certainly not possible because I do not deserve a bank account. I was so surprised. We tried it with my own driver. We couldn't succeed. Today, 10 years later, it's amazing how the financial inclusion, well, the story that I've told you is around 2006. And then the Jan Dhan happened in 2014. And the Jam Trinity happened by 2017. And today, if you look at the quality of discussion that we have had today, unbelievable, unbelievable. The journey has been very, very impressive. I'm happy to take a question or two, but before I do that, I want to give an opportunity to all the four panelists who in their own right were absolutely excellent. If they have any observation to make, 30 seconds or about 40 seconds each. So, and then we'll open up for a question or two. And if somebody has a question, please raise your hand. I'll give an opportunity to ask a question. But before that, Mr. Chintala, same order, Mr. Chintala, Mr. Anil Kumar, Professor Meenakshi, and then Siddhartha. If you want to make any observations, closing observations, more than happy to have that.
Sir, I'll rather wait for a question than
Okay.
I've said enough.
Okay, Mr. Chintala.
Yeah, thank you, sir. We have all spoken so much. And definitely what you told was right, that if somebody from Bombay was not able to open an account, and you can imagine the plight of people in the rural areas, and so how it was there. But today, I can say, because now by being chairman of NABARD, actually I used to go around and say that even in the remotest part of the country, like Ladakh, now at that far off place, actually people are having. And also now this financial inclusion is not only just maybe the concept, but thing is, you are giving the mobile vans, you are giving the ATMs, you are giving the POS machines. In one place in Chamoli district, actually, that I went during the peak Corona period, and they told that thanks to the vans, that mobile vans given as a kind of a outreach program by NABARD under this FITF, and where the government of India is also partner. They say that in the Chinese border, where otherwise generally people can't do anything, actually people are able to transact, people are able to do the things. And they were so happy with the way the entire financial inclusion concept has been rolled out. And I think it is a fantastic journey. And now with the 5G that is coming, we are going to have even a much better, because today actually we are working so much, because now after retirement, actually I look into so many things, because the startups and so many things, people look into it. The way the the youth is now trying to do something actually that they want to cover the whole of 1400 million people with some kind of a thing, whether it's access, credit, or maybe the insurance, giving the technology and bringing a whole gamut of things. Actually, now that is the country is right now is brimming with quite a lot of a confidence, new startup kind of an ecosystem, which is fueled by this entire this telecom revolution. And it's a great thing, and maybe the hard work done for decades now has come to a fruition. That's what I can say.
Thank you. Totally agree with you. Professor Meenakshi?
Yeah, I just want to say this, that the digital financial inclusion undoubtedly is very, very important. But by digital, we are actually many a times meaning that we are having a Paytm account through which we are able to pay and so on and so forth. But actually to get access to credit, that is quite different from actually having just the digital account or POS machine or Paytm account. It is much different from that. And I'll just give one example and stop. For example, a farmer, when he has to get a credit, he has to get a no due certificate from all the bank branches of his vicinity by physically going to these bank branches. His credit, where he access credit, different bank branches, they are not linked. So therefore, he has to physically actually go to different bank branches, get no due certificate, and then he can get access to credit. So digital platform has various dimensions, and we should consider all of them when we talk about financial inclusion.
See,
Because,
the most important thing which I'd like to share is when I interviewed the Dabbawalas in Worli, the other area, you'll be surprised. They felt there's no need for them to have a bank account. So why do I need a bank account? My whole life is moving so smoothly. So on one hand, of course, we sitting there used to think that we need to give them credit and insurance and services, and we need to ensure the remittances was a very interesting story. When I interviewed them in 2006, and I told them you will be able to do remittances in your family from Bombay to Bihar or Orissa, wherever, they said, why? Because I do a one single phone call. Next signal, somebody is waiting, collects the money, in half an hour, money reaches. And I used to be wondering how much of loss the organized financial sector, apart from that, the information is not available. How much loss does the organized financial sector, where network infrastructure has already been totally developed and laid out, this is escaping the system. So I think now when we talk of Jam Trinity, and now just look at, we're thinking in terms of the digital world where we are going to take care technology applied to financial inclusion and fintech playing a role. It's amazing to listen the success story that India has done in 10 years. Siddhartha, please, you are at the in the midst of all this. Bandhan Bank is a bank which has come from that place. You want to say something more?
I think we have covered a lot, mostly from all my esteemed panelists. Just one last point, possibly I would like to highlight once more, that when we talk so much about employment creation and the kind of employment creation at the bottom end of the pyramid, which that particular segment where there is a lot of question mark about their employability, the kind of difference, the magical difference this particular segment creates is worth watching, worth knowing for everyone. For example, if so, my bank, if I take the number, it has microfinance customers roughly to the tune of 2 crore. And if I assume that just 50% of that, the real number is much more. If I assume just 50% of them have employed at least one more person, that means we are talking about job creation of about 3 crore, which is roughly 2% of the total population of India, or maybe that means we are talking about 10% of the households. If I am talking about, so then the absolute amount of this particular industry is just about, say about 3 lakh crore or even less than that today. So in terms of the overall magnitude compared to the overall banking sector credit, it's minuscule. But the number of lives that it touches, changes, if I may use the word transforms, is possibly something very, very different. So you actually need to see not in terms of value or amount, you need to see in terms of number, where it's needed the most, where the beautiful difference, the magical difference has come. And it's up to on all of us to take advantage of the newer tailwinds of data and digital that is waiting for us to take it for the next level.
Yeah, and I can't imagine what happened with the self-help groups. I think the grassroots level revolution started with the self-help groups, and I think there has to be a case study and something to celebrate how NABARD did it, extended it across the country, and as Mr. Chintala was saying, that now it's covering such a wide canvas. Let me now take a question from Mr. Sarabu. Mr. Vijay Kumar Sarabu, do you have a question?
Yeah.
Yeah. Please be brief.
Yeah, just I asked 2 questions only. Can you hear me?
Yes.
Yeah, I'm having 2 questions. One is what is the latest percentage of that agriculture credit access to agriculture credit by agriculture in India? That is not in the PowerPoint presentation, Meenakshi. And another question to Bandar Bank head, that is, please can you provide the latest data regarding the digital financial inclusion in India? What is the latest data?
Okay. Before that, I would also like Dipali. Dipali, would you like to ask your question? Then we can go to the speakers once. Yeah, please tell your question.
So my question is regarding microfinance. So I would like to ask that will lifelong learning approach of BCS, that is business correspondence agents, will help in microfinance inclusion? Because now we are moving towards digital financial inclusion. So everybody is getting access to the mobile phones and all things. So will it affect the role of BCS in microfinance?
Sure. I would, if any one of the 4 panelists would like to answer, I can. Yeah, Mr. Chintala, please.
Yeah, I think business correspondence will not be out of fashion, because whatever be the digital kind of a thing is happening, still the rural poor needs some assistance with regard to getting the loans or doing the transaction, all those things. Because now that whatever be the thing, because now if you really look into the telephone thing also, even today most of the rural poor are still having the analog phones. I'm not saying that they are able to transact business the way we are doing it. So you require that kind. And second thing is, this business correspondent is a professional who maintains the whole thing, and actually he gives you the entire kind of a thing, really what kind of data you require, and also he does the transaction on your behalf. And many places now the loans are also being disbursed, because once it comes, actually that the business correspondents can as well make the disbursement also, because once that is there in their account. So now these are few things that business correspondence will always be there. And also that I'm even surprised to see the latest HDFC Bank's announcement, because they have done a record kind of a dividend distribution this time. But that time still, what the HDFC says that now we are going to expand the physical branches. Actually, they have never said actually that despite all these things, I think you require that physical presence, both the branches and also the business correspondents. So actually now both the things will go hand in hand. And likewise, as the Sanyal was telling, actually you are having so many foot soldiers, because now if everything can be done just by mobile, because ultimately mobile or anything actually will be an enabler for you to make the faster transaction. But that doesn't mean actually that will do the entire assessment of your credit worthiness or able to do things. So actually you require the foot soldiers at the ground level. You call it as a MFI. In case of microfinance, they are the maybe the staff they call, and in case of the normal banking, they are the business correspondents. All of them will remain. This is what my in this thing. But thing is, their roles may undergo a much bigger change, because he is also transforming. and he's also doing the whole thing. And also they require quite a lot of higher amounts to be kept with them, because right now we have put artificially 50,000 or so. And after every 50,000, this poor fellow has to travel to the nearest branch to get the cash again and do the thing. But as the volumes are going up, probably they require more, and where the safety nets have to be worked out, really, how the embezzlement should happen. So this is the one which I'll say. And with regard to that agriculture kind of a thing, actually, quite a lot of data is already available, but otherwise, out of 140 million farmers India is having, I think 120 million are there in that small and farmer marginal category. That is 86%. And if you really look into the statistics, actually, most of them, out of this almost around 80% of the people are there in the institutional network. But the only thing is whether every time they are getting the credit or not, actually, this is a different thing. Because if you look into the statistics, on an average, around 70 to 75 million farmers every year they get the credit. Rest of the people, either they are having defaults, or maybe that they are not willing to take, or they have some kind of issues. So that is why thing is there. And second thing is that if you look into the volume of that agricultural credit in 2000, because actually we were seeing this one from the 1970, actually the entire agricultural credit given was 0.2% of ANBC. And in 2004, 3, that is when the doubling of credit concept was given that time, the total agriculture credit was 56,000 crores. Today, the agriculture credit this year was close to around 18.5 lakh crores. I think it is one of the largest kind of thing. So now, and everybody is getting quite a lot of no doubt about it. Actually, that institutional credit is flowing. And for the statistics, actually, you can refer, because there are so many publications are there. Now you can do that. So definitely, you will get access to that.
Thank you, Siddhartha.
Yes, sir. I mean, I think Mr. Chintala has summarized it so nicely. But if I just take it to that particular question, that how much is digital and how much is physical in terms of activity and dispersal, I think again, as Mr. Chintala also explained, that it might be futile to try to segregate them. We need to see how exactly these two approaches can complement each other. So the way we see that the knowledge, discipline, enthusiasm, and commitment of the field force is of I mean, absolute no compromise kind of a category, element for any business to succeed, financial inclusion drive to succeed. But what we are doing, I'm not only saying digital, I'm saying specifically using two different words, digital and data. I think we are depending on that very significantly, not to drive it separately as a separate unit or a separate chain, but to equip my field force with a lot more. It's like in today's IPL fever, if I may think that my field force is batsman, and these things are his bat, pad, gloves, and helmet. If I send the bat, pad, gloves, and helmet without the batsman, it will not score me runs. But if I send the person with all the pad, helmet, and gloves, the chances of his success and a safe success is far higher. We are just going towards that.
So let me now.
I just want to
please,
say one thing about the question that was asked about farmer. As per the NSSO data, about 50% of farmers have some outstanding credit in his account, and about 32% have credit from the institutional sources, and about 10% people have used digital money.
Thank you. Anil, do you want to have any observations?
Yeah, I'll just supplement the data of 28% of the requirements being met from the informal sources even today in the rural areas. That was coming from the NAFIS survey of NABARD. That was 2017. I'm not sure whether there has been a survey after that. So that is the data which we have.
Second survey is being done.
Is being done. So then we will have an updated position for a specific answer to that. With respect to BCs, whether mobiles can supplant BCs or they can render them not necessary, I think the areas where BCs serve are the areas where the mobile penetration in terms of the smartphones may not be that much. Even though UPI is available for the feature phones, But still, the fact is it's a challenge going forward whether people in those areas would be able to undertake most of their transactions physically, in addition to the fact which has already been stated that people do prefer a physical delivery of the financial services.
Thank you very much. I would like to share with you, recently on Twitter, there was a picture in Orissa, elderly lady walking to the branch with the help of a chair. And I remember these days in urban areas, many elderly come to the bank, not because services are not available on internet or cell phone, but they come to chit chat with the staff. And the staff also knows the customers. And many times I call them, these are the life certificates that the customers come and provide the staff. Because on the first, second, or third of the month, you know there's going to be complete set of these elderly who are going to walk into the branch. And on other days, on some business or the other, they'll walk into the branch. The branch manager, the officers know the customer knows them. There's a little interaction that takes place. In tier 2, tier 3 cities again, I feel the brick and mortar branch is here to stay at least for next 10 years. I don't see the brick and mortar branch will vanish from there. In the rural areas, again, I find that there are certain days when the frequency of visitors in the branch increases. And that is so fine and beautiful that the human touch, the friendliness between the customer and the banker, that is what I think is so enriching in our country. So I think the business correspondent is important. It played a very important role at a certain juncture in our journey on financial inclusion. I'm sure, as the panelists have said, we need to enhance the amount. Therefore, the business correspondent will carry more amount. But despite this, the brick and mortar branch, the kiosk, it'll continue to enjoy that privilege. And I want that privilege to happen, because as I'm getting old, I don't mind going to the branch once in a month and chit-chatting with the manager myself, because I feel so uncomfortable of doing all transactions on my cell phone. So I think the banking has to have a human touch. Then that human touch comes from this, not just the machine. Yes, Anil?
Yeah, just a clarification to Meenakshi. She was wondering whether the index which we have constructed, it captures the data from the cooperative banks. So we do take data from the cooperative banks in our index, which we published, and that is on the total saving bank accounts that they have, the total credit amount which has been extended by them, the number of branches that they have, and the banking outlets other than the branches.
Thank you.
Thank you.
So with this, let me conclude this session by thanking each one of the panelists. They have brought to us, to our knowledge and to the knowledge of the rest of the world, because this is under the G20 Ages Task Force 5, we are doing this together, that there is so much to learn from this experiment that we did in India. And the last 10 years have been so transformative that many countries in the world, especially the least developed countries and many Latin American countries, may like to look at the Indian model far more seriously and imitate it. That will help their population extensively. Next week, today's presentation will be available tomorrow by noon on our website. Please feel free to use it the way you wish to. Next week, we have a topic which I think is very, very interesting for all of us. Should we use international reserves for sovereign wealth funds? So the topic is international reserves, and I would invite all of you to kindly come and participate next week too. Once again, thanks to the panelists and thanks to the participants for enriching this discussion. Good night.
Thank you. Thank you very much.
Thank you, Professor.